So today we're covering change in state of delivery. So change in state of delivery is PDRA, a very important one that we need to know how to use, because you'll find change in state of delivery, you'll be using it at mostly at reversal points. So change in state of delivery occurs when price transitions between phases, changing delivery from bullish to bearish or from bearish to bullish. So we have two types of change in state of delivery. We have a bullish change in state of delivery. This is where a candle body closes above a bearish candle of a series of bearish candles that sweeps sell side liquidity, signaling a potential upward shift. And then a bearish CISD is a candle body closes below a bullish candle or series of bullish candles that sweeps a buy side liquidity, signaling a potential downward shift. So bullish CISD signals a potential upward shift, and bearish signals a potential we are changing our state from bullish to bearish, so downward shift. So how can you use a change in state of delivery? So first of all, change in state of delivery cannot be used in isolation. We focus on the CISD that sweeps liquidity within a higher time frame key levels. So these higher time frame key levels can be fair value gaps, order block, breakup blocks, inversion, fair value gap mitigation blocks, just any of our higher time frame PDRAs. That is what you're going to refer to as our key level, and we care about CISD that happens within that key level. So this increases the likelihood of a true directional shift. And this also helps you to identify high probability reversals with great confidence, because you're not going on the markets just looking for CISD anywhere. We are very specific. So now let's start with a bullish change in state of delivery. So with a bullish change in state of delivery, this example here, we have a 4-hour fair value gap. So this is our higher time frame key level. So the market is retracing to this 4-hour fair value gap. So when we make a lower low, automatically there we have swept liquidity, because this is a lower low. Here we have a sell side liquidity, and then we retrace. When we make lower low and tag our key level, already we have swept liquidity. So this last leg that that tags our higher time frame key level, we need to look at the consecutive candles here. So this market was going down, so that means you're going to look at bearish candlesticks here, consecutive bearish candlesticks that tagged this high time frame key level and swept this sell side liquidity. So then we are going to mark the body of the candles. We're not going to mark the wick. So let's just go to the charts so I can show you an example. The USD on the weekly time frame, we had a key level here. This is a weekly fair value gap. So once price tags our weekly fair value gap, we can now move to the lower time frame to look for change in state of delivery. So weekly lower time frame for weekly is a 4-hour time frame. So let's move to the 4-hour. So now when you move to the 4-hour, I want us to look at this price action here. So at this point here, the market is lower low, lower highs, lower low, lower highs, until we finally dip in our higher time frame key level. So we've said the first thing is we need to look at the bearish candlesticks that tagged our key level and took out liquidity. So these consecutive 1, 2, 3, we took out this sell side liquidity here. Number one, as we were tagging our higher time frame key level, and then price came and closed above this. So this, when we're making change in state of delivery, we are going to mark the body, the first candle. If it was only, there are days where you only have one candlestick, you just mark that one. But in this case, we have 3 consecutive bearish candlesticks. So we mark the body there. So the moment we close above this point, that is when you can consider a change in state of delivery has occurred. A good example is here. At this point here, change in state of delivery has occurred when we closed above this body here. So now change in state of delivery, like we said, can be used like any PDRE. So in this case here, price retraced to this fair value gap here before finally now price going up. So change in state of delivery signifies to you, or it signals to you that a reversal is happening. So in this case, the reversal is here. Price tagged here, and then now we reverse. This is just a retracement. Then we continue with the move up. So that is one example. I want us to still look at an example here. This is a bullish change in state of delivery. So we have this fair value gap here. Let's see what happens when price tagged this fair value gap. So this is a 4-hour fair value gap. As you can see, we tagged this fair value gap before bouncing off the fair value gap. So this 4-hour fair value gap is our higher time frame key level. So now we can move to a lower time frame. I want you to see how price we retraced, tagged our higher time frame before leaving. And in the process of doing that, we took out this low, we took out this low, and also we took out this low here. If I move to an even lower time frame, let's use the 15 minutes. So if we use the 15 minutes, we took this low here. So this is sell side liquidity. Just by making a lower low, as we tagged our higher time frame key level, already that is a liquidity sweep has happened. Then we have 1, 2, 3, 4, 5. So these are 5 bearish consecutive candles that tagged our higher time frame PDRA before we closed above it. So here already change in state of delivery has happened here. So this candlestick body closing above this high is what caused our change in state of delivery. And so again, we have this fair value gap here. As you can see, price tagged this fair value gap before we started rallying up. But you see, change in state of delivery, you can use CISD to confirm if your higher time frame key levels are being respected by price. So most of the time when price is respecting your higher time frame key levels, you will get CISDs. Let's look at 30 minutes also. You can see if you wanted to, if you are using 30 minutes, your CISD would happen where here. This is where we would mark our change in state of delivery. Because remember, all these are consecutive candles. And we took out this liquidity here. We took out this low, we also took out this low. As long as you've taken out some liquidity as we are going to tag our higher time frame key levels. So this is change in state of delivery. So that shows that this 4-hour PDRA has been respected by price. Let's look for more. I think GBPUSD, we also had a good example of CISD that I want to show you. So if you come to GBPUSD, all these are bullish change in state of delivery. So you can see for bullish change in state of delivery, we are using bearish candlesticks because we are changing delivery at that point. The retracement, if you look at it on a lower time frame, it's a bearish move. So we are switching from that bearish move to now a bullish move. And in our case, this bullish move is a continuation of the bigger move. So our key level is this for our time frame, fair value gap. So let's move to a lower time frame. So change in state of delivery happens here, right here, because we made a lower high, then a lower low. So our CISD happens at this point here. this candlestick is closing above this high. So this candlestick here is the one that caused this change in state of delivery. So then you can use change in state of delivery for entries, and you can also use it just to confirm that a trend, maybe price is continuing with a trend. If you move to even a lower time frame, 15 minutes, let's see. Again, you can clearly see 15 minutes. So yeah. So those are some examples of how you can use change in state of delivery to confirm that a PDRA has been respected. So I have many more examples here on this PDRA, on this ebook. As you can see, price tagged the 4-hour fair value gap, and then we got a change in state of delivery the moment we closed above this high with this candlestick here. That's example 1. Example 2, again, we made a lower low, took out this low, and then change in state of delivery is here. More examples are here. This is a fair value gap for the higher time frame. Change in state of delivery is here. These consecutive 3 down close candles as we tag our higher time frame key level. So once we close above it, that confirms for us that a reversal is happening. That's why we have change in state of delivery. This is also another example, the same thing. So I'm going to send these documents on Telegram so that you can have access to it and see the many examples of change in state of delivery. So that is for bullish change in state of delivery. So for bearish change in state of delivery, it's the opposite. So bearish is a situation where the market is going up to tag a higher time frame key level. And as we're tagging a higher time frame key level, of course, you're making higher highs. So the process of making higher highs already, that is a liquidity sweep. We tag our higher time frame PDRA. Then, so here you'll see it will be consecutive, a series of up close candles or even one close candle before the move that caused the reversal. So this is an example here. So this is a 4-hour order block, and this is the lower time frame. So as you can see, price was retracing to this 4-hour order block. We took out this liquidity here. And then where does our change in state of delivery happen? So these are 1, 2, 3, 4. These are 4 consecutive bullish candles that drives price to tag our 4-hour order block. Once we close below it here, this candlestick is the one that caused change in state of delivery at this point here. Then we have more examples here. So this is a 4-hour fair value gap. So so this is the first time price tagged our 4-hour fair value gap. Then we came again and tagged the second time. As we were tagging this fair value gap the second time, again, we swept this liquidity here. So this 1, 2, 3 bullish candlestick. This is what caused that CISD to happen the moment we close below it. That signals that a reversal is happening from this bullish move to that bearish move. So these are just more here. So that is it about change in state of delivery. And the difference, don't confuse change in state of delivery with market structure shift. You realize that change in state of delivery are marking the candle bodies. Market structure shift and change in state of delivery normally happens around the same region, but you'll find that market structure shift, you will mark the week. Let's look for an example here. So in this case example here, market structure shift would happen here. I would mark this week, this swing high here. This is the point where market structure shift would happen. So most of the time you find change in state of delivery happen before market structure shift happen. It might be the same candlestick where CISD is on the candlestick body, then market structure shift is on the same candlestick, but now on the wick of the same candlestick. Other times it's different candlesticks. Now like here, this is a different candlestick that we would have used for market structure shift.